JP Morgan now controls about 40% of the silver at the COMEX. And with them moving their trading desk, to the east recently, it kind of tells me maybe they're preparing for the paper market to break and physical market's going to take control. And if that's the case, then London and New York loses control over the paper market, and more than likely Shanghai takes control of the physical market.
Hello, everyone, and welcome to another edition of Triangle Investor Interviews. I'm your host, Lucian Valkovic, and before I announce my guest, just a quick reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products, or services. Always do your due diligence and consult with your financial advisor. I'm joined today by Thomas Parilla, investment professional, entrepreneur, and president of the Parilla Investment Group, and one of my favorite guests to talk about gold and silver. Thomas, great to have you back. Thank you very much for joining me today.
Good morning. Thanks for having me.
Thanks a lot. Let's start, of course, with gold and silver. You said the decades of paper trading by banks is breaking down. We have silver up more than 85% this year and strong ETF inflows. Are we finally seeing true physical demand set the prices?
Yep. And I think what we saw, recently when the COMEX came pretty close to breaking, I think that's exactly what you're seeing. Finally, we're beginning to see, pricing reflect reality rather than the paper spoofing we've seen for the last 20 or 30 years. And based on what I'm looking at, I think it may come to a head between now and March. March deliveries looks like a key point. If the price of silver is anywhere above $75, then I think you could see some real havoc at the COMEX. It's interesting what's going on. I mean, JP Morgan now controls about 40% of the silver at the COMEX. And with them moving their trading desk, to the east recently, it kind of tells me maybe they're preparing for the paper market to break and physical market's going to take control. And if that's the case, then London and New York loses control over the paper market, and more than likely Shanghai takes control of the physical market. And that could be a domino effect. Then you wonder, how does that affect the U.S. dollar? How does that affect, who is the reserve currency for the world? There's a lot of things that go, boom, boom, boom after that. So it's a battle that's taking place right now. There isn't enough physical out there. So I think as demand continues to come in and clean out the vaults, it's probably going to get tighter and tighter until the COMEX eventually breaks.
Yeah. You said JP Morgan has 40% on COMEX, right? What is
Right.
that
Yeah.
signal?
It's amazing, right? The Hunt brothers tried to do that and they got arrested, but a bank does it and they're applauded. It just depends on, what side of the room you're sitting on, I guess. But yeah, I mean, they're doing it. They're controlling it. And the crazy part about this, and this is the part that will be very interesting to look back at historically. JP Morgan was a part of the whole spoofing, charade for, more than a decade. So they purposely kept the price down. And at the same time, were accumulating physical. Also, while they were keeping it down, the Chinese were accumulating a lot of physical gold and silver at these low prices. So I guess the real question in my mind would be, at any point did JP Morgan collude together with them in order to keep the prices low as they loaded up on physical? Or was this just a byproduct? They were pulling off this paper spoofing and the Chinese took advantage of it. Either way, they helped the Chinese pick up a whole lot of physical metal at very cheap prices. You could just imagine if the price of gold was up here the whole time, how much more money the Chinese would have had to spend, or maybe they just wouldn't be able to get that much of the gold in the vaults. So our bullion banks, I don't think did the United States any favors.
Yeah, you will correct me if I'm wrong. On COMEX, we have over 51 million ounces demanded for delivery this month. Is this really heading toward the default or market crash? I mean, it's a big red signal.
Yes, there's no doubt there's going to be a default, and I think the Chinese are going to force it. Um, if you look at some historical things, go back maybe before your time, even the Vietnam War, before the United States got involved, it was the French. And if you recall that just about the time they were about to have a treaty with Ho Chi Minh, there was one last major battle in an outpost. And there was about 11,000 French soldiers there. And back then they weren't called the Viet Cong, they were still called the Viet Minh. They surrounded them with about 50,000 troops. And they didn't care how many people they lost. If you looked at it from a numbers point of view, the French won that battle handedly. But the whole idea was no matter what it cost the Viet Minh, they were going to overrun that position and massacre the French. And that's what they did because they knew the second they did that, it was going to break the way the world looked at the French and the French Empire and French military power. And it would be a shift of power. I think the same exact thing, the Chinese have that in the back of their head. No matter what it costs them, I think they want to break the hold that New York and London have on the metals market because in their mind, that breaks the way the world looks at both powers and shifts that power to Shanghai. And potentially at that point, then leads to them being the reserve currency, which I would imagine would be a gold backed yuan. But it could be a part of the BRICS program. I think it'll be a gold backed yuan at that point. But you can kind of see the same similarities where they're just going to throw everything they have at it until they break the COMEX, and then that's it.
Yeah. So
We've never had that before. In the past, when you've had situations like that, there'd always be a deal where the shorts would cover with cash, and there'd be no danger of a default. But you never had this type of physical demand ever in history before. So it's a different
that
game.
yeah, that's what I wanted to ask you. Have we seen this kind of things in the past? Okay. Could this push physical premiums even higher? What's your take?
Yes, absolutely. Yeah, I know we were in backwardation there for a while. It kind of goes in and out of it. I would say absolutely premiums are going to go higher, and I would say you're going to see now the pricing is going to reflect actual supply versus demand. But we've had deficits on silver for years and years, and yet it hasn't been reflected in the price. Now, any other type of good, if you had bananas, if you had a shortage of bananas, the prices will go higher. Why not silver? Why not gold? It's the same thing. It's a commodity. Everything is supply versus demand to some degree. The fact that they've been able to manipulate that, I mean, honestly, you got to feel for the miners out there. I mean, they were ripped off. I mean, if you went out there and you say a miner went bankrupt because the price was so low that he lost everything, uh, that guy should be paid by somebody because he was stolen from. It wasn't a fair market. He did his job right. He took his product, took it to market, and the prices were rigged. And in any other industry, somebody probably would have gone to jail for it. I mean, in some ways, I kind of applaud what the Chinese are doing. They're bringing reality to the market. But I think the United States and Britain, we should have beat them to the punch. I don't know why we haven't.
Yeah, you said China taking pricing control from the West, and I agree with that. But how might US tariffs change this and pull more metal to America?
Well, I know a lot of people looked at the tariffs as just simply, tariffs. I think it was onshoring. That's how Trump looked at it. I think Trump was trying to bring all the gold and silver he could back here to the United States and using the tariffs as a tool to do that. And in some respects, I think it's been useful. So, and the other part about it is the tariffs. I think a lot of guys looked at the tariffs and what went on with Russia, and they said, how do we get around that and physical metals? Yeah, it's pretty hard for them to come in and put sanctions on physical metals like they could the monetary system or the SWIFT system. So, yeah, I think that's exactly what's happening right now. I think the tariffs played into it to a degree, but I also think this was coming for some time now where the Chinese, it took them a while to clean up Shanghai. If you remember back in the old days, it was always kind of a joke because you didn't know if the gold bars were gold or tungsten. And now the Chinese, everything that comes in there now gets melted down completely. They know it's pure and they know, so they're doing it the right way, which is what they should have done from the beginning. But now they're actually running it in a professional manner. And that's a real threat to London and New York. No doubt about it.
Yeah, Tom, I want to hear your take on inflation as well. U.S. Treasury, I don't know how many billion debt buybacks. That is a sign of the coming quantitative easing. So, how does this signal more inflation and a weaker dollar?
Y- I think inflation's going to ebb and flow. I mean, over time, it's going to go higher just based on the devaluation of the dollar from the overprinting of it. But I think the inflation that we've had, like when Joe Biden was in office, that was really a reflection of the supply chain being broken at that point. So I think we have two different types of inflation: short-term inflation caused by supply-demand problems with the supply chain, but longer-term inflation just simply, the Weimar Republic, as you're printing your dollar into the ground. So you got two different types of it, but yeah, I think in the United States, our inflation's not bad. It's not bad. Price of fuel is low, and that's keeping inflation fairly low. But I mean, natural gas has spiked recently, and that's going to be a problem as we head into winter. So I kind of think Trump's going to focus on that. If you look at what happened in Trump's first term, that may be a decent trade for people. It's not the mining sector, but I mean, I noticed in Trump's first term, the price of natural gas went up quite a bit after he came into office, and then he just turned the frackers loose, and boom, came right back down. So some of those leveraged natural gas funds are rather interesting. There's two that I watch quite a bit: Boyle and Colt. And they're two-time leverage funds. Boyle, you make money on the way up. Colt, you make money on the way down. I would say if you see nat gas go up high enough where Trump begins to take political pressure, he hates that. And as soon as he does that, I think he picks up the phone and they get the frackers rolling. And he'd frack every inch of the United States if he had to bring the price back down.
Yeah.
And it should set up a nice trade for somebody. So I'd keep an eye on natural gas and watch the news wires as Trump starts taking heat for it. Then it'll start to turn. And at that point, I'd say a person maybe switches from owning Boyle to buying cold. And
Huh,
Cold is Kold. It's a two-time leverage fund.
interesting. Thomas, you predicted silver could hit $100 in 2026 and gold 7,500 or even more. Are your price targets still intact or have you adjusted them? What's your take going forward with the
Yeah, adjusted them
prices?
just slightly. I'm going to wait to see how things play out. My models had gold hitting 5,000 by the end of January this coming year. So uh, clock's ticking on me there. But I mean, I think if the Fed helps us out a little bit with some rate cuts here, to get a 10% bump between now and the end of the year wouldn't be that big of a deal. And if they start to price in the next rate cut in January to take it then from say 46 to 5,000, 5,000 is still in range by the end of January. But my model has 5,000 by the end of January and $75 silver by the end of January. And then a year out from that, $125 silver and $7,500 gold. And
Okay.
actually, on the US dollar, I've got it a year out going down to the index down to 90. And right
Okay.
now it's slightly over 99.
Yeah. Yeah. We didn't touch much on the US dollar. Do you really see the death of the US dollar in the upcoming years?
Yes. Yeah, and the key there is that it doesn't fall off a cliff, that the Treasury and the Fed massage it, so it's a controlled implosion. If that's the case, it won't be a catastrophic type of a thing, but I think we've got to start planning for the end game. And at that point, I think we have to go back to the mistake we made in 1971, going off the gold standard, and then go back to it. And maybe we massage it a little bit. Maybe this time it's a basket of currencies with gold as the anchor. But we've got to go back to a more stable situation. When you look at what's happened since 1971, I mean, for example, 1983, I went to Mercyhurst University. It was $10,000 room board tuition. Now it's like 58,000. Has the education improved that much? It's the same school. But inflation, new cars. When I got out of college, I think a brand new car, you could buy a nice new car for about $12,000, $13,000. I mean, now look at the prices of them. Houses. You could buy a pretty nice middle class house in Erie back then in a nice safe neighborhood for $60,000 back then. I mean, now those same exact houses are probably about 150,000. So that's what's happened just in the last 30 or 40 years in housing. So there's no doubt we really screwed up when we went off the gold standard. And we were lied to. No doubt about it. I mean, Nixon, I guess from a legal point of view, didn't lie to you. He said the dollar you hold in your hand today will be worth the same dollar tomorrow. But what he didn't tell you is the purchasing power was going to be eroded. And that's going to continue. I mean, you just can't put that much debt on top of it without that happening. And you think about it, and like you mentioned quantitative easing, we just saw the largest, buyback in history. So that tells you the world's not buying our debt, so the Fed turns around and does it. And when they do that, they just print dollars. And you can't do that for very long. I mean, if they ever taught that in a business class, everyone would think you were crazy. You're going to go ahead and buy back your own debt. It doesn't make any sense.
What
If it
about
did, we'd all do it. Yeah.
yeah. What about the other global currencies, or the fiat system is globally over,
Yes.
or you really see some currencies surviving, so to say?
No. Every single, really throughout all of history that's happened. Every single fiat currency has always died. And look at the mess you've got right now. Japan, they've got a whole mess there. There's no doubt their currency is going to die. You look at the financial messes around the world. I mean, Germany, they're facing all kinds of economic trouble right now. So I would say no. The whole group of them, the fiat currencies, will die, and I'd imagine it'll be a situation where they come together, the central banks, and they work out a new system to say, like a Bretton Woods, and they say, okay, we're going to come out with a new currency, and here's how it's going to be. And it's going to be commodities backed. Uh, but they've got to move on that, because if they wait too long, the Chinese are going to beat them to the punch, and then that's going to be the reserve currency, and that's going to change things quite a bit in the future. And I think that's what the Chinese are racing towards right now.
Yeah.
Yeah.
Let's return to the miners. We spoke briefly on the miners. I know that you are bullish on some names, especially in the Golden Triangle, Goliath Resources, and some of them. But my question to you is, what do you hold at the moment as the biggest value among the miners? I mean, which group? Producers, developers? Give me some color,
Yeah,
please.
exploration miners. Yeah, everything goes through a cycle, and same thing in the mining site. What typically happens is the price of gold and silver takes off first, and the miners lag, and everyone says, geez, why aren't they going hand in hand? They just don't. The first ones will take off and be the producers. So we saw Newmont, Barrick, those guys take off first. And then the last group is the exploration miners, because what happens is the price goes up, supply gets tight, the producers start looking for more supply, so they go to the exploration miners. And the Golden Triangle should be just absolutely a perfect situation up there. I think there's probably, I don't know, maybe 48, 49 different public companies up there, so people can put together their own mutual fund. For me, Goliath Resources, I think they're kind of like the Cadillac up there. If you look at their drill results, it's just fantastic. Their sister company right up next to them, they bought properties, Juggernaut, same thing, just great drill results. You got up there, Doubleview is up there. I would say there's probably 5 or 6 that I absolutely love. My largest holding would be Goliath. I'd say my second largest holding is Juggernaut. Doubleview is right there. And the only holding that I have down in the U.S. that's an exploration miner would be Arizona Gold and Silver, Mike Sark's company down here. And same thing. I mean, their drill results have been just fantastic this year. That stock probably deserves a much higher multiple than it's getting right now. And I just think it's mainly because people just haven't really heard of it. And the other part of it is the exploration miners have lagged. I mean, if you look at the capital market on there, I mean, compared to some of the producing miners, it's not even close. So they always catch up, and sometimes it's a slingshot. People they lose patience, they dump the stock, and then they turn around, and all of a sudden it's went up 250%. And that's typically what happens with the exploration miners. They take off, and they have some of the biggest runs you're ever going to get, but you've got to be patient on them. And I would
Yeah.
encourage people, spread your eggs around, don't put all your eggs in just one stock just because I love Goliath. I'd buy, if you could, buy 8 or 10 of them, make your own small fund out of it, and just spread your eggs across the board.
Any other commodities or stocks?
Well, I know you were on uranium right from the beginning, and I'll tell you, between you and Sprott, you were the first two groups on them, and you guys have made an absolute killing. And talk about
Thank
cycles. I mean, when I was a kid, of course, nuclear energy, that was going to be the future. And then all of a sudden the anti-nuclear people came out and everything slowed down. And now all of a sudden you can just see it coming in. And with the push for AI, you've got to have energy. And how else are you going to do it without nuclear energy? I don't think you can. So I would say your uranium play probably isn't just a 1 year deal. I think you could probably see maybe a 5 year deal or even longer. Um,
Definitely.
so I love uranium in here, even though I don't own any of it. I think it's a great buy though. But I've stuck right to my basics: gold, silver, platinum. Um, but I think even if you went down to the strategic mineral companies and started looking at companies that like are in fluorspar, barite, manganese, they're all going to get just red hot. We're going to see almost like a Manhattan type project where the United States, Canada, Australia, you're going to start pushing hard on strategic minerals and working to put stockpiles together so they don't have to rely on the Chinese. Because you got to figure one of these days the Chinese are just going to cut it off and say you're not getting them. If they were to go into Taiwan tomorrow, what do we do? Because if we go in and defend Taiwan, they just stop delivering minerals. So you don't get rare earths, you don't get minerals. If you're not self-sustainable, what kind of a country are you? Just like a human being, if you're not running your house in a self-sustainable manner, it's irresponsible. The United States, Canada, we have been led by people that have been irresponsible, and now we're behind the eight ball, and we've got to catch up. But that's the nice part about free people. If you turn them loose and you let them work and you make the permitting process and the refinery process streamlined, they can catch up very quickly. So I wouldn't count the United States or Canada out by any means. I think Trump's the perfect president for mining and drilling. Um,
Business.
I think you're going to see a real boom for energy and mining stocks and also critical minerals all across the board.
Yeah. Final question, Tom. That is actually a question from one of my followers. He asks me to ask you, if somebody would give you $2 or $3 million to invest, where would you invest today?
Exploration miners. Yeah, period. Yep. I'd do exactly that strategy, and I'd go right up to the Golden Triangle, and I'd spread it across the board, and I'd play overweight Goliath, Juggernaut, Doubleview, and probably Arizona Gold and Silver. But I mean, maybe Onyx Gold you could add into the mix. There's 4 or 5 other companies up there that are just beautiful, but absolutely the exploration miners are at the perfect part of the cycle now. So they're the ones that are going to take off, and historically, those are the stocks that run the highest. So I think in 2026, you want to overweight exploration miners heavily.
Fair enough. That was Thomas Parilla. Thomas, I really enjoyed our talk. As always, thank you very much for coming, and I look forward to host you again.
Thanks for having me.